Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Jonathan Thomas, and he is a certified financial planner and advisor on the private wealth team at LVW Advisors. Welcome, Jonathan.
Hi, Gary. Thank you for having me on. Very honored to be here today.
Great. So, Jonathan, give us your background. Kind of, where'd you go to school? What got you into wanting to be a CFP?
Yeah, absolutely. So my background is I had a lot of jobs in high school. I was that kid that, I was working at the golf course as a caddy in the cart barn. I worked at a casino as a bar back. I worked at a shoe store. I was the kid that I was dropping sports left and right because I didn't want to go to practice. I wanted to make money. And one day my mom took me to the bank to meet with an advisor or somebody at the bank to learn about opening up a CD. Neither of us knew anything about money or investing. And this advisor started talking to me about stocks. And I was like, well, what do you mean by a stock? What is that? And he explained that, you could buy companies like Verizon, like Coca-Cola, McDonald's, and actually own a piece of the business. And I was obsessed right away. And my mom actually, started taking me to the library, and I was reading books on personal finance, and I was just super into it. And so from there, I went to the University of Pittsburgh, Hail to Pitt. I studied finance and economics there. Always knew I wanted to get into this space, right? So got into wealth management right away out of college, and I really hit the ground running. Did 3 years at a bank, another 3 years at an RA in Pittsburgh. Been up in Rochester for about 8 years, and have been working with LVW for about 5.5. So it's been a great ride. I've learned a lot, and it's an exciting industry to be in.
Right. Um, you know, because you have done the institutional side and you've done, more, I'm going to say the private wealth side of things. Can you tell the listeners kind of what the big difference is between those two?
Yeah, institutionals are that business is really like nonprofits. Think of them as like endowment funds, for example. So you're working directly with, the investment team of that organization. And so you're managing a pool of assets that, let's say that college is going to need to keep the lights on and keep that place growing. When you're working with private individuals or high net worth families, it could be everyday people. It could be someone who's 90 years old and their great grandchildren and everywhere in between. What I like to do is I like to help people. So I like to meet them where they're at, give them some good advice, probably manage their investment portfolio for them, but really give them actionable ideas to help them make good financial decisions, help them up for their future.
What, with the private management side of things, and working with, you're saying that, hey, I like working with people and helping them and stuff. What is it about that really, because again, it's great that that you want to help people, but what's the part that makes you passionate about what you're doing from that side?
I love it. Yeah. So I think in this industry, as you know, Gary, there's a lot of complexity out there. You turn on the news and half the time I don't even know what they're talking about.
Right.
They use these acronyms as crazy stuff, terminology makes no sense. I like to make the complicated really simple for people so that they understand it and hopefully it make them at ease. And I think the best thing that I get to do every day is to maybe help that client understand that they can retire a year or two earlier than they thought. There's this like preconceived notions in people's heads like, oh, I got to work until I'm 65 or 67 or whatever it is. And well, no, actually, you can retire a little sooner. And then later in life, it's like, hey, you can actually help your kids with a down payment on their house, or help save for your kids' education. Or you can give to that charity you really care about. We have so many clients that give back to like their church, for example, and that brings them a lot of joy, and it brings me joy to be able to tell them that they can do those things. So that's what probably is the most passionate I think for me.
So at LVW Advisors, you guys kind of, I'm going to say, have a little bit of a different approach than you would have if you were at the bank. Can you kind of
Yeah.
tell the listeners, kind of what those differences are and why, LVW has chosen to go that direction?
Yeah, so we're an independent firm, right? And so what that means is we have access to really the best software services available. For example, like a new software comes out or a technology that we want to use on behalf of our clients, if it's a financial planning software or if it's a direct indexing platform that's out there. I mean, we're very nimble. Like if there's something that's good out there, we'll go ahead and get it and we'll use it on behalf of our clients. Whereas with a bank, it's a little bit slower moving, right? There's a lot more complexity there and compliance issues. And then from like the client service standpoint, I just think it's a lot better. We're able to really, tailor our meetings to what the client needs. We're producing a lot of content both on the blogs and YouTube videos. We're putting out quarterly YouTube videos. We call them the state of the markets, where we just kind of talk about what's been going on in the last quarter and go through like 10 or 12 slides. And I think clients really like that. We've been getting some good feedback. And really, it's also like a fun component too, Gary. Like in the last couple of years, we've done a short game clinic, we've done a putting clinic, we've done a cocktail making class and a wine tour. I mean, those are my interests, but
Sure.
it turns out a lot of people have those interests too, and we
Right,
make them
right,
fun, right? There's an educational component. We'll have speakers come in. I've done a few of the presentations around like tax planning and things like that. So, it's just a little different, but I think it's good for the client.
right. What what are some of the common mistakes that you're seeing clients before they come to you guys? What are some of the common mistakes you see that they're making?
It's a good question. I think one thing, and this isn't necessarily a mistake, Gary, but you'll understand this. A lot of people throughout their career, they've done a good job saving, right? So they're putting money in their 401k. Maybe it's a target date fund, whatever. It's growing fine. They've done well. But then they get to retirement and now they have all their money in a 401k that's all tax deferred. Like all their money, like
Mhm.
sometimes several millions of dollars, and they have no taxable money, so they have no money in normal brokerage accounts, very little in liquidity, and they have no Roth IRA accounts.
Right,
So, though, yeah, so what happens is, you get to retirement and you think you're going to not pay a lot in taxes, but it turns out maybe your tax rate's actually going to be higher because when
right,
those required minimum distributions kick in at, for most people, 75, it's a huge awakening. So what I'm trying to do is get in front of those people a little bit and say, hey, even though maybe you're in a high tax bracket and it wouldn't make sense on paper to be putting money into a Roth 401k, it's probably a good idea for you because now you have another bucket of assets, another pool of assets to pull from in retirement, and it could actually lower your tax bill over the course of your lifetime.
right. You said earlier that you've done some presentations and stuff on tax savings and tax planning. Can you talk about that a little bit?
Was around estate planning and tax planning in retirement.
Okay.
And, we're in New York, and New York has the New York estate tax cliff, which is pretty penal. So it's any estate over $7 million gets taxed pretty heavily. So talking about, the history of that, ways to avoid it, and the federal tax exemption amount is kind of through the roof, and it doesn't look like it's coming down anytime soon. But for people in New York that have pretty good retirement savings, that cliff is a serious deal. So, we talk about that, and then the tax saving piece is like um, talking about Roth conversions. What's a Roth conversion? Those pre-retirement years or early retirement years before you have those required minimum distributions, before Social Security. Those are really good years to do a Roth conversion. And a lot of people don't know what that is, so it's nice to be able to help explain that.
Right, right. Um, what from a business owner standpoint, what do you see is some things that they're doing from a financial side with retirement that may not be the best thing to do?
Yeah, from a business owner standpoint, people are really focused on the business, right, Gary? Like,
Right.
that's what they do. That's what they know. That's what they're good at. It turns out they neglect a lot of these financial things, like saving for retirement and like a retirement vehicle, like a SEP IRA, solo 401k, things like that, or even just a Roth IRA. And if they can't do a Roth IRA, explaining what a backdoor Roth IRA is to them. Um, but just having a control of their assets too. I think so many people are neglecting, obviously not having a financial plan, but even just a balance sheet, just to be able to say like, hey, what's the status of my assets? What does this look like? Should we get a valuation on the business? All these portfolios I have, what's the total? So having a clear balance sheet, financial plan would be great, but just a better idea of, where you stand.
Right. Right. Um, because I know we deal with a lot of business owners from the tax side of things, and some of it that I see many times is they think that their business when they sell it that's going to be their retirement.
Mhm.
If you're talking to a business owner like this kind of leaning in that direction, what advice would you have for them?
About that is like let's say, for example, your business is real estate. So that could be commercial property, rental properties, whatever it is. Your business is real estate. So all your money is tied up in real estate. That didn't work out so well in 2008, right? Like if you
Right.
needed liquidity at that point, that would be a tough pill to swallow. I like to say that, you can't take a shingle off your house and go to Wegmans and go to the grocery store. I mean, they don't accept that. You need to have liquidity, and you could potentially be a forced seller in a down market. So that's not a great position to be in. So diversify, have enough liquidity, safe assets, uh, to prevent that from happening, I think is key.
Right. Right. Now, if you got to go back and talk to your 19-year-old self, what advice would you have for yourself?
Yeah, that's a good question. I think so. I'll speak to anyone, I guess, entering the industry or who's really interested in this type of thing is, first be a sponge, right? Like absorb as much as you can, get as much knowledge as you possibly can on the industry. Ask a lot of questions. I tell people that it's not what you know, it's who you know. And I don't mean that from the standpoint of like you got to have your dad in the business and you got to have all these connections. It's just meeting someone and asking them, can you introduce me to your boss or your colleague? I really want to pick their brain on this and that. And then before you know it, you have this extensive knowledge of people that you can tap into. What I found in my career is that people want to work with people they like and people they trust.
Hmm.
And I think that's the same with, being an advisor and having clients too. Like you want to develop those relationships. And ultimately, you're not going to learn everything from staring at a screen all day, right? Or reading the books. Like the CFP is a great knowledge base. You learn a lot there, but you're not gonna you're not gonna learn everything unless you're out there talking to people and listening.
Right.
I think that's crucial.
Where do you see your industry and so forth going in the next, 3 to 5 years?
Yeah, it's a good question. I think over the last several years, it seems like investment management has become more of a commodity, if
Mhm.
anything, right? So easy to now to do yourself. It's so easy to call Vanguard or I guess Robinhood now. All these different custodians. They make it so easy to invest. The hard part though is the psychological component and the emotional component that goes along with investing. So being there as a resource for clients when they need you most, when the market falls a lot.
Right.
That's key. But then the financial planning piece, I still think is often overlooked. There's not enough people focusing on that in our industry, and that's where really the rubber meets the road, right? Like that's the important stuff. That's where you get to those life-changing conversations with people about how you can actually make their lives better. They can give back to charity. They can do all those things. So that's really important.
Right. Um, for our listeners that may not have a financial plan right now, or maybe didn't start saving as early as they should have. What advice would you have for them?
Yeah, start small, start often, and do as much as you can. I think budgeting is key. Um, Spend money where you want to, right? I think money is finite. We only have so much of it, right? I don't care who you are, unless you're Elon Musk, you only have so much money, but don't throw away money. If you enjoy golf, like spend money on new golf clubs if you want to, but don't spend money somewhere where you don't really care to. I think that's a big piece. But ask for help. So if you're listening to this right now and you don't know where to start, ask someone. Ask me. I'm more than willing to answer any questions or to help. I mean, there's people that know enough that it can be a good source of help and a good resource.
Right, right. Um, so I mean, we covered a lot. This time always goes so quick. Jonathan, what have I not asked you wish I had?
I mean, you kind of covered everything, Gary. Yeah, this is great. So I guess like I talk to a lot of younger clients now, right? So we're meeting with multi-generational families. So now I'm working with clients, grandkids. So I guess if there's anyone out there listening, they may be curious, like, okay, I just had my first kid, what should I do? I have three kids, so I can speak to a lot of this now, and they're all, under five.
Hmm.
So it's a handful. But I think, if you're out there listening and you don't know where to start and you don't know what's important, I think you got to have life insurance. You got to have term life insurance, right? Term life insurance is really cheap. And I think the standard recommendation is like 10 times your income. So that's a good start. You absolutely need an estate plan. And what I mean by that is a will. And it's not so much about where your assets are going to go. It's going to be who's going to take care of your kids if something happens to you. I mean, that's really important. It's important to me. It should be important for all parents out there. And then how to establish a 529. I mean, not enough parents out there are getting those started early because, as you know, compounding is a huge thing. And if you can get that started when your kid is like a newborn, you could actually end up with a decent chunk of money by the time your kid is entering college. So, those are all really important steps that I wish people would know about, early on in their investing lives.
Right. So, Jonathan, people like what they hear, and they would like to reach out to you, talk to you. How can they reach you?
Too kind. Thank you, Gary. So LVWadvisors.com. I mean, we've got all of our blog posts up there. We got YouTube videos, some good content. There's contact info there. And then on LinkedIn, I'm on LinkedIn as well. And please consider me a source of help or a resource. If anyone has any questions at all about anything we discussed, I'm happy to help. I had a lot of mentors in my life growing up and would like to pass that on to the next generation or anyone who has any questions at all about what we covered.
Great, great. Jonathan, really appreciate your time today. Enjoyed our conversation.
Gary, likewise. Thank you so much for having me on.
Sure. Hey, this week my guest was Jonathan Thomas, and he's a certified financial planner and advisor with the private wealth team at LVW Advisors. And I'll see you guys next week.